All right, we're back with you, and we're going to invite into the conversation Mr. Brian Hoops of Midwest Market Solutions in just a moment. I wanted to talk with him about these winter wheat condition numbers that came out from USDA yesterday. And in fact, it's kind of timely because the Wheat Quality Council tour started today, and they're going to be making their way all through the Kansas and surrounding region there. So here's a look at the national numbers from USDA yesterday. So the Port of Very Poor category is now 37% nationwide. The fair category is 30%. The good to excellent rating actually picked up 2 points to 33% good to excellent. Now keep in mind, a year ago, and they had problems last year too with the winter wheat crop, it was 54% good to excellent last year, and right now it's rated 33%. Now, just in the Great Plains area, we have Texas reporting a good to excellent rating of 16%. Now, they picked up a couple of points. Oklahoma at 9% good to excellent did pick up 1 point from what we had a week ago. On the Great Plains, Kansas condition, 13% good to excellent. That's up 1 point from last week. On the winter wheat condition for Nebraska, they're rated at 63% good to excellent. That's up 7 points from a week ago. And South Dakota improved 12 points at 32%. Some folks thought that maybe that would weigh on the markets today, but if it did, it was very short-lived because the markets have rebounded since. Brian, I want to get your thoughts here on how the wheat trade is holding up here today so far, and the corn and the soybeans. Everything kind of strong.
Yeah, it is. You know, we're hearing reports out of this tour that's going on in the wheat areas. They are expected to be in the best wheat areas of Kansas today and then move into some areas that have been hurt worse. And the reports we're getting is that they're not finding very good wheat crop right now. So I think that's really given some strength to the market in here. Just tour findings right at this point is probably the most attributable reason that we have for strength in this wheat market.
So typically the track will originate in Manhattan, Kansas, in the northeastern part of the state. It will run along the northern border, the northern few tiers of counties, end up in Colby tonight in the northwest corner of Kansas. Then tomorrow is when they are expected to see the drastic conditions in western Kansas as they move south and then east toward Wichita. So it'll be very interesting to see what they find and don't find tomorrow. Let's take a look at our current prices here, Brian, on the corn market and soybean trade, and then we'll get into the wheat market as well in Chicago. On the corn trade right now, we currently have July 3 higher at 403 3/4, December up 2 1/4. On the soybean market at the present time, we have that July contract now 1/4 cent lower. This thing has been all over the board today. We're now at 10.48 1/4, so we have been several cents higher and lower today. November now down 3/4 at 10.44. On the wheat trade in Chicago, we currently have July now 12 3/4 higher at 523 1/4. On Kansas City wheat today, we currently have the July contract there 9 higher at 546 1/2. Meanwhile, Minneapolis wheat on the spring wheat trade, of course, their planting is way behind. We have July now 2 higher at 617 1/2. Brian, your thought on that soybean trade? Why is it chopping around so much on both sides of one change today?
Well, the soybean market is really struggling in here. We do expect that we're going to see more soybean acres planted, and that'll show up in the June report. So that would mean that prices are probably overvalued for current levels where they're at. Demand has really slowed up. We saw a private export sale yesterday of beans to Argentina, but our weekly exports should be pretty disappointing. We've almost gone bone dry as far as any export business. And so the market's really struggling, coming to grips with increased planted acres, maybe slowing demand trends. And then you also have this big crop out of Brazil that's being harvested, but strength comes from soybean meal, and that's given us, at times, some strength in the soybean market.
Cotton trade has firmed up just a little bit today. Quick look at our July and December contracts. July up 40 points at 84.24, and December 22 higher, right at 79 cents even. Brian, I'll bring you back here in a moment. We'll talk a little livestock trade on the other side of these messages. Come on back. And we're back talking with Brian Hoops of Midwest Market Solutions in Springfield, Missouri right now. Well, we covered the grain and crop side there. I want to take a look at the livestock sector here. It's kind of a tale of two markets today, Brian, where we had a lot of weakness in the cattle trade, but the hog market early on at least has had signs of strength today. In the cattle market, let's look at the current futures trade. In June, we are now trading $1.95 lower at 104.15 per hundredweight. That's just a dime off of our earlier low low of the day. August down $1.30 at 103.22. The April went off the board yesterday, by the way. On the feeder cattle trade, as we switch over there, big losses there today. We have May down 243, quoted at 137.75. August down 240 at 143.80. September down $1.90. The nearbys leading the way down in both cases. Why this sudden weakness here in the cattle market today, Brian? Have you heard anything?
Well, I've heard rumors, and I don't want to spread rumors, but this is what reason that we're hearing in the cattle market is there is a possible strike at a plant in Nebraska that would shut down kill capacity and thus reduce demand for cattle. Cash trade would end up being lower. That's really weighed on these front month futures especially. And, we're testing last week's lows off of this rumor or this news possibility that is what's dragging the cattle market down.
Is that something that's rumored to be happening near term or down the road a piece?
No, I think it's near term. From what I can gather, and details are real sketchy, but what I can gather is this is going to happen very soon, and that's why it affects the front month cattle, because it's going to impact those slaughter directly.
Well, that would definitely have the ability to put pressure on the market. We'll have to keep our eye on that topic, that's for sure. What about lean hogs, though? They went the other direction early this morning, and at times they showed very strong strength, but then they kind of backed off of those highs. And right now you have your May lean hogs 60 higher at 66.90. That's only one tick from the high of the day. And you have June at 73.60. That is 90 cents higher than where we closed yesterday. It's still about 22 cents off of our earlier high this morning. So at times it does come off of the highs, and then it seems to kind of resurge once again and get closer to the highs. So lean hogs apparently fairly resilient here today in the face of all the bearishness in the cattle, Brian.
Yeah, today they are, and a lot of it has to do with the farmers real focused on fieldwork activities and ignoring cash markets, and they are trying to firm up a little bit. Since the 19th of April or so, the market has pulled back off of its highs, completing almost a perfect 62% technical retracement. Now we're seeing a little bit of a bounce as seasonals turn higher, and we should see some buying interest go into the Memorial Day demand period. So we do look for commercial entities to be aggressive buyers on price weakness.
So are there opportunities here that producers can take advantage of, maybe some option plays or something?
Well, yeah, I think once you get to the seasonal rally unfold in here, we get back those summer months back up near $80. There's a place where I would be looking at doing hedging or option strategies. At this price level, I think there's more risk to the upside than to the downside, and so you may not want to use your hedging strategies at this point. But if we can get a seasonal rally over the next 2 to 3 weeks, still going to be plenty of supplies of hogs. Weights are still higher compared to a year ago. Definitely look at doing some hedging at that point.
All right. Well, thank you, Brian, very much. Appreciate that. Brian Hoops of Midwest Market Solutions in Springfield, Missouri. Janet, a regular cornucopia of information today. So anyway, interesting stuff. We'll check on that rumor.